Good morning, TradeStation Nation, and welcome to the Friday morning market briefing. Today, our presenter is Mr. Sam Seiden of the Online Trading Academy. My name is Don Prattle. I'm the Director of Trader Development here at TradeStation. I want to talk about a couple of things first. The stocks keep hitting new highs in an unusually calm market, but that hasn't flashed any warnings in more than a year that we are in danger of the bear market falling apart. So these are questions for Sam. Yeah, sorry about the volume. Sometimes it's too low, sometimes it's too high. I think it's just I had a lot of coffee today. At any rate, the Colgate-Palmolive, General Electric, SunTrust Banks, and Synchrony Financial all hold earning calls today. Our friends over at Charles Schwab give a summer business update. Standard & Poor's reviews Greece's credit rating, and Fitch reviews Spain's credit rating. There are some Treasury auctions that may impact the market later today. One thing we want to remember is that our presentation is for educational purposes only. All the symbols and all the trading ideas that we discuss here are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind, any place where a TradeStation affiliate is not authorized to do business. Active trading may not be suitable for everyone, and options trading carries a high degree of risk and is not suitable for all traders. Now, I have posted in that chat panel a couple of pieces of disclosure and disclaimer information regarding the risks of standardized options and some of the other products that are available in the marketplace. Also is a PDF that covers the upcoming webcasts for the remainder of July and early August here at TradeStation. As the Vice President of Education at Online Trading Academy, Sam Seiden brings us decades of experience in equities, forex, options, and futures trading. He's been involved in the markets since 1991, both on and off the floor of the Chicago Mercantile Exchange. In February 2011, Sam won the Forex Best Awards in categories of Best Educator, Best Educational Content, and Best Webinar from FXStreet.com, the leading independent portal dedicated to providing complete and timely information about the Forex market. We're very happy to have Sam with us this morning for the morning market briefing. Thank you, Sam.
All right, good morning, everyone. Let me get this screen going here and we'll get started. Volume should be okay. And you should be able to see the screen. Let me do that one more time. Okay, I think we're fine. And so good morning, everyone. As always, if I have a little list of markets here and setups to look at, if you have markets you want to look at, you can just type them in the chat. Terry, I wrote down TLT. We'll take a look. Good to see everybody. And we have some opportunities from our last couple sessions to look at too. Remember too, often many of the opportunities that we find in these Friday sessions don't trigger until the following week. Not always, but there's at least one or two that we find each week that don't really trigger to the next week, and it's important to keep these kind of on your radar. For those that are new to the sessions, we employ the same strategy here every week, which is quantifying the market's real supply and demand, identifying where banks and financial institutions are buying and selling, not have bought and sold. There's a big key difference there, where the demand and supply is, not where they have bought and sold, where they're going to buy and sell, right? Big difference. so that we can identify market turning points and market moves in advance with a very high degree of accuracy. That's our goal, and we follow simple rules to do that. Yep, I've got a bunch of those markets on my list, so let's get started. Everyone always asks for the NASDAQ or S&P first, so why don't we just go right to those. Specifically, we'll start with the NASDAQ, which has fallen quite a bit over the last 3 hours. But if we do get a rally in this market, and the rally takes price above 59.20, which I know doesn't seem possible right now because of where price is at, but if you've been, unless you've been hiding under a rock these last few months, you know that getting up to 59.20 from 59.06 is nothing and can be done very quickly. So we do have some supply that starts in the 59.23.50 area. I'd be careful getting in before that, but 59.23 to 23.50-ish area. And then, of course, when we break that down, you look over here, and that supply really goes up to about 27. Okay, so that would be 23.50 to about 27 right up here. And let me put this level in again for those that are new. So we want to get right at the meat of where that supply is. And then want to take that level up to here. Yep, right there. And this becomes our range. So make sure you understand that there is about 3.5 points of, or I would call it 4 points of risk in there. And, right, so we're looking at the NASDAQ, so that's $80 of risk per contract. Yep, just writing down a couple more of these symbols you're putting in there. Lagging, yeah, this shouldn't be lagging. Make it larger, sure. So there's the NASDAQ. Let's move on to the S&P. The S&P, we're looking for this one. What we're going with here is, if you look at, it's easy to look at the small time frames. You have a number of levels up here, but for this one, I would really focus on the larger time frame. And let me show you this. So with the S&P, you really don't approach any significant, I wouldn't even call it significant demand, but demand, I guess significant demand until you really get to, we haven't used up all this yet in the 64 range, but because of this wick to the downside in here, that's a clue that this demand just isn't that strong. So that takes us down to about 61. Okay. The origin so you have this big range here, and we've gone over this a number of times. You have this big range here, and we just broke down through kind of the midpoint of that range. And the origin of that breakdown is right around 24.70. Okay. So we'd focus on this area here. One real important thing that we don't cover all that much is the only downside to a level like this. Initial profit zone is okay. Bigger profit zone is also there, but don't discount the fact that this level is right in the middle of this whole range here. Okay. So yes, at the end of the day, this breakdown in price the last hour or so is telling us supply exceeds demand up here. What we care about is it a significant supply demand imbalance, right? Are there lots of orders sitting up there, or very few? Okay. If there were a ton of sell orders here, unfilled sell orders, you probably wouldn't have this big range here. Price wouldn't be sitting in this area for that long. Now, my experience comes from all my time on the floor of the Chicago Mercantile Exchange, actually handling buy and sell orders from financial institutions. So that's where this all comes from. I'm just showing you what it looks like on a price chart. Back to the NASDAQ for one moment. I just want to add something in here. And let me turn this into a 10-minute chart. I just want to make sure we have a profit zone and target in there. Okay. So for this, yeah, we would take it down to right just above this gap. Right there. Okay. Not that the gap is demand, or we would never use that gap as a demand level to buy against, for sure. But we need to place our stop a little bit above this level, and the blue line would be our target. It's a real nice risk reward there. We'll go through the YM quickly because these are all basically the same chart or very similar. And if we, let me put this back on a 5-minute chart. So we would need the YM to really, either really rally quite a bit, back up to 21,570, or if you're a really short-term trader, notice I haven't shown you this too often, but often for short-term trading, we have a little 1-minute chart here. Okay, and you'll always see these little levels on the 1-minute. They're great for short-term active trading. And the nice thing about the YM is, I'm going to bring you all the way down to the 4-hour. There's really a profit zone that takes you down to 21,418, which is 100 points below where we're at now, more than 100 points lower from the supply zones above. Make sense? Keep an eye on that one. Let's get to some other markets here. Oil. So if you remember the last couple of weeks, we've been going over this oil opportunity. Here's the daily. We did come up to our level, and we're now turning lower. Anybody take this trade? Anybody hanging on to this trade? Just want to make sure you're taking the trades that we're putting out here each week. And this is obviously a longer-term play. Nice big profit zone to the downside in oil. We just needed price ticket up here. Okay, great. Good, good, good. So just, again, it's the more you can just stick to plan, set and forget your short-term income trades, your longer term trades we just leave them alone, let them play out. If you're not in that one, you'd have to come down to some pretty small time frames to catch another entry in that. But we'd really need price to come back up to about 46.95. So back up into here, which can happen. Okay. I don't want to spend too much time on oil because outside of that, you're kind of the move has already started off the supply zone. Yeah, we'll go to gold next. Got a couple levels to look at there. Let's go to, sorry about that. Here we go. So, yeah, gold is up into this area on the daily, but let's wait for this 4-hour chart. Of course, the chart I want to look at that I have in my notes is slow. We'll give it a second here. While that's popping up, let's go to the 60-minute. We may be able to catch the level I wanted to show you here. Let's see. Oh yeah, there's that other level we had. Yeah, now 60-minute really doesn't show it all that well. Oh, here we go. So let's take a look at the 4-hour. We have, let me look at my notes here. Oh, we have a bunch of areas to look at in gold. First of all, we now have some demand in gold. I'll put another supply in there, zone in there too. So it looks far from this level, but it's really not that far. Again, gold is a big mover. Watch gold if and when it approaches this rally base drop supply. And I'll explain why. So notice with this one, we have our rally base drop supply zone. Okay. This is not a reaction to anything right here, a little bit. But my main point is, notice price attempts to come back to this level and can't. Yeah, Zohab, I see that. Yeah, for good reason. Those are found, far out on the curve. And again, notice price attempts to come back to this level but can't. Okay. That suggests that there's quite a bit of supply up here. So possibly price comes up to the supply zone, down to the demand zone, and then continues higher. Make sense? This demand zone is probably stronger than this supply zone, but both seem fine for a trade, going forward. Okay. Yeah, the odds enhancers, but yeah, rally base drop, drop base rally. Those are your levels that are found, far out on the curve. Okay, let's keep going here. Let's look at the euro. Got a 2, 3 more here, and then I'll get to the ones you wanted to look at. All right. If we look at the euro on a small time frame, let's go to and I'm going to put a horizontal line across the top here, and we're going to scroll left. That's not. Hang on a second. It's actually a good level here, so I'll get it to you. Here's the weekly, by the way. I think you've seen that. Okay, I think we're good here. Now let's go back. And 1 second. We're getting there. There it is. Oh, was it this? I wrote down I had something pretty good in here. So let's remember these prices. This goes all the way up to 11.7. Okay. Yeah, so there it is. So we're looking at the Euro futures. Now we're still not, we came up to this level and fell. However, if we go back up into that level, and especially make a new high into that level, I think that's what we want to see. Okay. Nice big profit zone to the downside. The first thing that even remotely resembles demand is right down here, but I wouldn't worry about that. That's it's a rally-based rally right in the middle of a move. We'd want to go further out on the curve for a stronger demand zone. Okay. So it took us a little while to capture this one, but watch for a rally back up into here. You could see quite a bit of movement in the euro today if we get back up to that level. And let's look at one more. Here's the yen 60-minute. A couple levels to look at here. First of all, we have some demand. Looking at our odds enhancer scoring system, should play out pretty well. So a drop down to 89.71 would be the entry point, with a stop below 89.60. About 89.55 should be plenty. So 71 to 55 is what you're looking at here. That's entry to stop. And then if I put a horizontal line in here and scroll left, you'll see there's not a whole lot up here. Nothing fresh anyway that we're coming into. This rally-based drop that we're in right now, it's not fresh, but it could cause prices to decline down to our 71 demand. So keep an eye on that if you trade the yen. And let's go to a couple of the ones you wanted to look at. Let's go to Apple. So opening down a little bit today. Not much. Give me 1 second here. So just basically filling the gap possibly on the open here in just a few minutes. But let's put a horizontal line here. If we do get a rally, what does that take us into? Not much. I'm already down to a 10-minute chart. I don't really want to go any smaller with a stock like Apple. But obviously if we do get up to, well, you're not going to get there. It doesn't look like you're going to get here anytime soon. Yeah, we're pretty far from that. Let's look at, I'm just going through your list now. Let's take a quick look at TLT. And let me just look here. Looking back in the chat a little bit. Okay. I mean, TLT does have a little bit of supply. Well, let's see where we're at here. Okay. Yeah, a market like this, I would always focus on the larger time frames. So let's pop this over on a 60-minute chart. Yeah, if we do rally up to the, the 26, call it 50-ish, 45 to 50 area, we would expect a decline. For that one, though, again, every week I push you to look at the 10-year note. You can see what it's doing here. Remember, our expectation is that the 10-year is going to, rally through this level next. Didn't quite hit our demand zone down here, but again, the bigger expectation, we have new demand below. So the expectation is that we start to pop up here. And let me take a quick look at that, your CL there. Yeah, you do have this rally base drop here that starts around 47.10 all the way up to 20 or so. You could take, again, if you're not sitting in this daily, off the daily level, if you're not taking this trade from there, it's a low risk place to try to get back involved, because again, you do have quite a profit zone to the downside in oil. Right? Remember, we're looking for oil to move down into the low 40s and then eventually into the high to mid 30s. That's what the chart is suggesting. All right, let's look at another one here. It's the Canadian dollar. This was a big mover this morning. But where's it going? So when we look at the larger time frames, as soon as we get above this high, you have plenty of stuff over here, and I want to show you. There's a reason why I brought this chart up. Yeah, so just above this high, you have this level sitting over here. Okay. Now we're looking at the Canadian futures. If you trade the spot market, you'll see the same level there. Just look at your daily chart. We're not there yet. What's nice about this level is it's fresh. It's coming out of a rally-based drop, and you have a decent profit zone to get this thing started, possibly back down to 78 even area. If I look at this on a little bit smaller time frame, you'll see that profit zone looks good. This stuff in here does not represent significant demand. Okay. And just looking back in the chat here. Yeah, the Aussie dollar, we had a level in here. I think I still have it in. This one. Basically on the 4-hour. Share it with you as soon as the chart comes up. There it is. So this is the level we hit over the past like 24, 48 hours. This whole area up here. So if that's the one you're referring to, great. This whole area, if not, if you get another rally back up there, we basically just kind of, went into the level briefly and fell. So nice profit zone down to about the 77.50 area. Okay. Yeah, finally, it's been like a couple years. I've been waiting for that. I haven't been waiting for this 4-hour level for a couple of years. I'm responding to Brett's comment there. Finally got through that weekly. Okay, so I know the market's about to open. If you have any questions on strategy or anything else, there's my email address, sseiden@tradingacademy.com. I just put it in the chat. And that's it. We'll see you next week. Thanks, Don. And have a great trading day and weekend, everybody.